I'm David Ingram. I'm talking to Dan Walkow, and Dan's a guy who specializes in cross-border money. He can look after your IRA in Canada. He can look after your RRSP in the States. He can look after your 401k if you want to keep it that way somehow. He can look after your RRIF. And if you've got a cash account, you can start off and see all sorts of companies in Canada. If you've got the RRSP and it's already with them, you can go to the States, and under the NAFTA rules, they'll still let you deal with that RRSP that was yours. But you can't move it back and forth, and lots of the companies won't let you buy and sell within the RRSP. But Dan, you can have that RRSP rolled into you as a new account.
Yeah.
And you can buy and sell within the RRSP if that's what the people want to do?
Yeah, we basically, if you're frozen at, we had a recent case here, a recent inquiry again from California. It was frozen by RBC.
Yeah.
And RBC, once they found out he was down there, basically told him he couldn't buy and sell securities anymore. So just another example of another institution which is not allowing people out of country who've left the country permanently to deal, because they're not licensed to offer advice in that jurisdiction. So they froze it. And so basically what you can do with us is, if you are locked at something, whether you're locked by Schwab because you're an American moved into Canada, or whether you're locked in the United States as a Canadian U.S. resident by RBC or others.
Because these big companies haven't gone to the effort to even do a little
well,
would it be nice if they'd done a little subsidiary?
No, we don't want them to do anything, David.
Well, but would it be nice if they'd done that? I know you don't want them to do it, but it would have been nice if they'd done it just to look after
It's a small piece there, but when you're running a gazillion billion-dollar operation.
I've got another thing. And
let me just finish one thing with this on the thing here. So basically, if you're locked up, either an American account or Canadian account, we can roll it into one of our accounts. There's no cost. We don't charge to transfer it.
Yeah.
And basically, all this, you don't have to sell your securities. You want to keep the account with what you've got, and maybe you want to tweak it, or you want us to help you sort of advise what to do next. We can transfer everything in kind, providing there's no proprietary products.
Yeah.
Right. And you can keep all the securities you have. I think there's an impression at some point from I had some questions on it. Does it mean that if I come with you, do I have to sell everything out and then you start managing it? The answer is no. We'll work with you with your existing holdings. We'll keep what you want to keep. We'll, advise you what maybe we think you should have, and we'll customize it and manage it to your specifications. But you do not have to sell out all of your RSP if you roll to us, or you don't have to sell out all the underlying securities in your IRA if you come to us.
So you can keep it the way it is if that's what you want to do to get started with.
Right.
I have another thing that's happened to two different clients, both American citizens, both living in Canada. They have, one was a BMO account.
Right.
One was a RBC account.
Right. Bank of Montreal and a Royal Bank. Yeah.
Yep. And
brokerage accounts or bank accounts, David?
Brokerage accounts.
Yeah.
And they have, and I'm talking in both cases, large amounts of money. The American stocks, even though they're U.S. citizens and have given their U.S. Social Security numbers to the institutions, the institutions are still withholding 15% withholding tax on their dividends,
right,
and giving it to them on a T5.
Ah, yes.
Right? Now, it takes immense work to be able to get the U.S. government to accept that that was a withholding tax.
Right. Right.
I got to ask, is C-Bank dealing with that somehow? I mean, they don't have to withhold the 15% because they're U.S. citizens.
Right.
It's number one. Number two, it's simple. They can issue a 1099 recognizing that.
Right. We deal with we deal with a couple of custodians in Canada. One is TD Waterhouse, and they offer, I do believe, the appropriate. So if you're a U.S. resident and you have Canadian securities, or I'm sorry, Canadian dollar. You're talking about U.S.
I'm talking about the U.S. government getting 15%
right on the withholding
on a Canadian account.
I understand
that they shouldn't be taking into the circumstances.
Right, but you're talking about a Canadian domestic, right, who happens to have a portion of their portfolio in U.S. dollar.
They're living in Canada, but they're U.S. citizens.
They're living in Canada, but they're U.S. citizens. Yeah, there's no sense, there's no withholding. I do believe we don't have anybody like that right now.
RBC and BMO are both taking tax, when, in my opinion, they shouldn't be.
TD, I believe, has worked around that. I'll
Well,
get
some
back.
of them give a 1099. I can't remember in my mind right now.
Right.
Some of them will give a 1099 and a T5,
Yeah.
and in that case, that's a problem. I did this in one of my questions and
I'll
answers
get back
last
to you on
night.
that because we'll clarify. That's a good issue because as we come across more Americans in Canada, who utilize this service, certainly we're having U.S. dollar investments.
And then, of course, under the new article of the tax treaty, nobody takes 10% on the interest anymore.
Right. Interest is fine, right? It's the dividends, yeah.
Yeah, but you see, again, if you're a U.S. citizen living in Canada and you've got this, and you're having to file your U.S. tax return on the interest it's from an American account, you have to calculate tax, but there's no tax under the treaty.
Yeah.
So you have to resource your income and go backwards. It's so complicated. It's just a
but
mess.
I think, again, that's the level of work and why your services are so valuable.
I know. What time is it, Richard?
We got 5 minutes.
About 5 minutes? Well, we should be breaking it a couple of minutes in there. The situation. So if somebody wants to go and see you, if they can consult you now, you'll charge $2.50 an hour.
$2.50 an hour. We're just, but we're going to start this basically in the new calendar year.
And I got to say that I think that that's a smart thing to do, because the business of people coming in will give you a free consultation while we look at your stuff, or something. Anybody that goes in and does that always has this feeling of, well, I got it. And if they can just go and consult with you and you charge them for whatever the time involved is, that's fair.
Well, it's not fair. I mean, I think in looking back over the last years, we did our sort of
feels better to the people
assessment of what we were our business operations for the last corporate year. We got several inquiries over the year where at the end of the conversation, it was listen, thank you so much for the advice and so forth. Do I owe you anything? The expectation was there to pay a fee of some sort. And I've been, being the nice guy that I am, David, I just said, well, don't worry about it. Just send somebody. If you thought we did give you the decent advice, just send somebody who might use our services, right? Mm-hmm. But as we get more involved, as you know, I've increased the staff at Seabank Capital here.
Well, doing this program was going to generate a couple more phone calls too. So if you charge for it, I think that's fine.
Yeah. So as I said, the deal is that, if you eventually become a client within a reasonable amount of time, we'll just rebate that right back against your first quarter's fees, so you're not out of pocket for any of the advice from the get-go. And if you decide for whatever reason, or there's no legitimate reason to use our services, and you know what, if you phone up and you say, I want this counsel or whatever, and I'm quite happy to use you, and I don't think it's appropriate for you to use us, maybe your business objectives, maybe you don't need us to manage a portfolio of equities. Maybe you don't need investment management per se. Rather than sort of take the fee from you and sort of, I'm going to be the first to say, listen, I'm going to charge you just a fee for an hour or two of consultation. You go and do this, 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 and that, because that's what's right for you. Rather than, we're not going to win in the long run by just trying to, get the business at any cost. So I'm quite, but again, if paid a fair fee, I don't have any problem in doing that.
Okay. Because one of the other things that always comes along is that marriages do break up. And
they do. You ought to know a bit about that.
Oh, I know a bit about that, yeah. But dealing with the broken up marriage always has a problem in terms of the financial person, the accountant, the lawyer, and so on, because suddenly they need two of each.
Yeah. And
it's always a problem to find out who the heck you're going to do. Anyway, I think I'm going to call it quits on that because Richard just gave me a sign. Dan Walkow, you can get hold of him at any time. His daytime phone number is, if you're out of the lower mainland of Vancouver, you can get hold of him at 866-541-9952. And if you are in the lower mainland, give him a call at 604-541-9952. So 866, get the pen out, 866-541-9952. And Dan, thank you for coming again.
It was a good session tonight. Yeah.
It was fun. We touched on a couple more things. We're going to talk about Texas next time, you said?
We're going to talk about Texas next time.
Texas next time.
All about Texas.
Texas. Love Texas. Of course, there's Alaska, too. Alaska's a big place. And
well, I think there's anywhere there was, Canadians who may need our services. I think we want to at least let them know if there's any tax issues, investment issues,
Well, what we should do
which
is
are particular to that
we
particular
should
region.
do a New York State one, because New York State does have a little bit of taxation issues where they are going after telecommuters, people that are working in New York State on a New York State company's computer. They've now taxed 2 of them.
That's an interesting thing.
They're the only state that's done that.
Well, wait for California. We won't be far behind. Right? any kind of tax grab is fair game.
All right, we'll be back on bankruptcy. Everything you wanted to know about bankruptcy with Murray Morrison.